I can guarantee you that this is going to be the most comprehensive video that you have ever watched on volume and price action. And no, I'm not here to sell you anything. And I can guarantee you if you stick around until the end of the video, you will never have to watch another video on volume or price action. But let's hop into it. All right, so in case you're newer to trading, let's get the boring stuff out of the way first. We're going to talk about a green candle and a red candle, and then we'll get into the more advanced stuff. But very quickly, a green candle, this is going to represent that price closed higher than it opened. So the lower portion of the green shaded area is where that candlestick opened, and the wicks are going to represent how high or how low price went during that time frame. But at the end of that time frame, price closed at the upper shaded green area. So again, this is representing that price closed higher than it opened. Let's just say that this was a 5-minute candle. At the beginning of the 5 minutes, price opened right here. Sometime throughout that candle, price went as high as here or as low as here, but at the end of that 5 minutes, price closed all the way up here. Simple, right? Now, as far as a red candle, this is representing that price closed lower than where it opened. So again, let's say this is a 5-minute candle. Price opened at this upper red shaded area. Sometime throughout that 5-minute time frame, price went as high as here or price went as low as here. But at the end of the 5 minutes, price closed all the way down here. Again, very simple, right? Now, this is where it can get a little more advanced. Candlesticks never form perfectly. There are so many different variations that candles can form. So this, for example, this is a bullish hammer. And typically when we see these, this is telling us that price is going to continue to go higher. Why? Because at the beginning of the time frame, let's just continue to use a 5-minute time frame, for example, price opened right here, but then eventually flushed all the way down to here. At one point, this was a solid red candle, kind of just like this. But at the end of that 5 minutes, price ended up pushing all the way back up to here and closing higher than where it opened, which is telling us that buyers are clearly present. And then vice versa for a bearish hammer. This is a very bearish candlestick and typically tells us price wants to go lower. Why? Because price opened right here, and throughout that candle, price went all the way up into here. So at one point, this was a very solid green candle just like this. But before that candlestick closed, sellers drove price all the way back down here and closed it at this lower shaded red area, which that's telling us that's very bearish. And then also we have bullish engulfing candles. So price opened right here and it made a very large and aggressive push right up here. That's very bullish. And then vice versa with bearish engulfing. Price opened here and made a very large aggressive push to the downside and closed all the way down here. I'm gonna show you guys a bunch of real examples of this. But I wanted to show this to you guys because again, candlesticks form in so many different ways. So let's head on over to the charts and actually look at some real candles. So I have my chart customized. My blue candles are actually green candles and then black candles are actually red. So if we go to the 4-hour time frame on the S&P futures, we have a very large bearish engulfing candlestick right here, which again tells us that price is more than likely going to go lower. What ended up happening? Boom, 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 boom. Eventually until price bottomed out right here. We have a very large bullish engulfing candlestick right here. And what happened? Price is now making a move to the upside. But I want you guys to look at all of these different candles because again, they're all very, very different. We have nice lower wicks right here, nice upper wicks right here, here, and here. We have solid bearish and bullish engulfing candles. But what if I told you none of these candlesticks matter without volume price analysis? So understanding what the actual candlestick is showing us is only part of the equation. We have to add volume to really understand what's going to happen next. So very quickly, what is volume? The number of shares or contracts of a security that are traded over a specific period of time. And just like the candlesticks, they can form in many different ways on many different time frames, while the volume varies on each time frame as well. So if we go back to our chart and we turn on the volume, here's our 4-hour volume candles. One candle represents every 4 hours. Every volume is going to represent every 4 hours. But we could break it down to a 5-minute time frame, for example. Now each candlestick is representing every 5 minutes. Every volume is representing every 5 minutes. Let's go to a 15-minute. Every candle represents every 15 minutes. Every volume is representing every 15 minutes. So again, we're going to get different volume and different candlesticks on every different time frame. And for us as traders, it really depends. What time frame do we identify the trade? And also, what time frame do we like to trade off of? I personally really like to use the 5-minute, 15-minute, and 2-minute when I'm day trading. And then when I'm swing trading, I'm using a daily, weekly, 3-day, monthly, and even a quarterly. So now let's actually piece together the volume and the price action to really understand what is happening. Because it's not as simple as looking at a red candle and seeing red volume being like, oh, there's a lot of sellers here, or vice versa with green candles. Just because it's green and has green volume doesn't mean it's all buyers. We have to really pay attention to these wicks and then the overall volume itself. So let's just go ahead. Let's use this for example right here. Yes, this is a red candle. Price open right here, went as low as all the way down here, but buyers drove price all the way back up into here. So yes, we have a red candle and red volume, but if we're looking at this candle, what it's actually telling us is that it's pretty bullish. And why is that? Because again, you have to understand what happened in this time frame. So again, price opened right here, came all the way down to here. So at one point, this was a solid red candle and was a bearish engulfing. However, by the end of that 15-minute candle, buyers drove price all the way back up into here. And that is a very long lower wick. So that was a lot of buying momentum to push price all the way back up into here. And then also what I want you guys to notice is that we have a volume spike. So looking at all the previous 15-minute volumes before this, none of them compared to this volume spike right here. So we can conclude that actually a majority of this volume right here was on the buy side. And what happened from there? Price made a nice little bounce to the upside. Now this is our opening candle right here, so we're not really going to talk about that just because volume's really hard to read at the opening candle. And it also depends on where are we trading. Typically, I really like to watch the volume and price action when we're trading at a key level. Now there was a really good example. I want to say it was yesterday in the pre-market. Yes, so yesterday in the pre-market on ES, we saw the same thing on the 5-minute time frame. Price was in a clear downtrend, but then we got this very nice bullish hammer right here. Again, very long lower wick and an elevation in volume. Just because this candle is red and red volume does not mean it's all selling. Again, what happened during that candle? You have to understand that and then look at the volume, and then you can piece both of those things together. So price opened all the way up here. Sellers drove price all the way down to here. At one point, this was a bearish engulfing candle, just like this one right here. But eventually, at the end of that 5 minutes, buyers drove price all the way back up into here. So because this is a higher elevation of volume than we have seen the entire morning, and buyers drove price all the way back up into here, we can conclude that a majority of this volume was actually on the buy side. And sure enough, what ended up happening? Price pushed back to the upside. Looking a little later in the day, price was going up, up, up. We got a nice little inverse hammer right here. At one point, this was a green candle. Price opened right here. It was green all the way up into here. But at the end of that 5 minutes, sellers drove price all the way back down to here. Now, looking at the previous 5-minute candles, this 5-minute red volume was higher than the previous 1, 2, 3, 4, 5, 6 green candles in a row, telling us that a lot of sell orders were being hit. And then from there, price pulled back. And I want to show you guys some trades that I've actually taken using volume and price action to help paint a better picture. Because again, a lot of people get confused by the candlesticks, the color of the candlestick, and the volume because they're not piecing all of these things together. So looking at these trades, hopefully it helps you guys out. All right, so here's a trade that I took using a 30-minute demand zone. And again, volume and price analysis is going to be most important, especially when we're trading at key levels, because that's what's going to confirm if we should take the trade or not. So here's my 30-minute demand zone right here. Small red candle, large aggressive move away. We want to look for price to come back down into this area and make it support. So the market ended up opening at 930, which is right here. We had a nice push up and then price flushed to the downside. But even looking at the 2-minute candle right here, what do we notice? Very high red volume, very bearish candlestick, very long upper wick. What happened? Price dropped to the downside. A little later, we had this very long lower wick and an elevation in volume. Again, red candle, red volume. It's not all selling. What happened? Price pushed back up. But when I took the trade, it was when price came down and hit my demand zone right here. So we can see that price came down into it. Very, very, very long lower wick, and look at that elevation in volume. It is very clear that buyers are pressed. So started my position here, added as price dipped back down to here, stop loss right below there, caught the move all the way back up into the high of day. And you could have even taken the trade over here. I personally didn't take it again, but looking at this candle, it still confirmed the setup. 2-minute time frame, very long lower wick. Yeah, it's red. Yeah, it has red volume. But guess what? We just hit a key level. So what happened? Buyers pushed price all the way back up into here. This to me is bullish with a stop loss right below that low. And what happened? Price pushed back up to the upside. Again, you have to understand what happened throughout this candle and then piece it together with the volume. And we can conclude that a majority of this red volume was actually buyers. Here's another really good example. I like to show people this one too. So looking at QQQ, 4-hour demand zone, small red candle, large aggressive move away, look for price to come back down into it to look for a bounce. But as we can see, we have this really small red candle right here. but a huge influx of volume. So what this is telling us is that there was actually a lot of passive buy orders sitting in this demand, but also still a lot of sellers trying to push price lower. It's just there was more passive orders here than there were sellers. And again, we got that huge influx of volume at a key level, confirming the long entry. And as you can see from there, price had a really nice rally to the upside. So again, I really like to show people that example too. So here's another example. I actually did not end up taking this trade, but it's a really good example and I want to show it to you guys. So on the 1 hour time frame, we have our demand zone right here, 5,300 all the way down to 5,294. Price comes down, tests the level way later in the day. Looking at the 15-minute time frame, yes, this is a very large red candle. Yes, we have a lot of red volume, but guess what? We're at a key level. And we can look at that lower wick right there. So because we're trading at a demand zone, which we know is support, and an area where we're looking for buyers to come into the market, because we dip back down into it and close right back up above the level, we can actually conclude that a majority of this volume started to come in from those passive buy orders sitting down here in demand. So again, looking at price action and volume, it's not as simple as, hey, it's a red candle and red volume, it must be all selling. Again, I'm going to keep repeating it. You have to look at where are we trading? What did the candlestick do? What did the volume do? And then piece all those things together to get a really good understanding on what's going to happen next. And let's look at one more example. All right, so this was a SPY trade that I ended up taking that did 150%. So my plan for the day was to watch SPY for a bounce at the 1 hour 21 EMA, which is this white line right here. When price came down into that area, I was watching a 2-minute time frame. So we see that we have this very large red sell-off down into the level. But as I was watching it, actually the volume really started to spike as soon as we hit that 1 hour 21 EMA and they started to push price up. So again, it's the same thing. We had a lot of passive orders just sitting at that area. And yes, we had aggressive sellers, but the amount of passive buy orders outweighed those aggressive sellers. So to me, even though this is a large red candle with a lot of red volume, it's still bullish because again, where are we trading? What did we just wick off of? And of course, watching the volume in real time as we hit the level. That's really when we started to spike. So hopefully running through those examples and showing you guys real trades that I've taken using basic volume price analysis at key levels helps paint a clearer picture on what you want to look for in price action and volume. But if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Comment down below any videos that you guys would like to see in the future. Other than that, have an amazing rest of your day, and I'll see you guys in the next video.